Welcome back. You're watching us here on Chartbusters. Let's get chatting about a lot of numbers. Philips Carbon and Chennai Petro, both of them are trading with deep cuts in reaction to their second quarter numbers. Sonal joins in to tell us more. Sonal.
Thank you for that. Well, for PCBL or Philips Carbon, it was a margin miss, though the revenue growth was strong at 52%, came in at 1,627 crore rupees, but EBITDA was up just 1%, leading to a margin decline of almost 600 basis points at 11.6%, and profits were down by 4% as well. Now, company said that volumes declined on a YOY basis in Q2 due to capacity constraints, and Chennai facility, which is the next leg of their expansion, will be commissioned by December 2022. And the peak utilization there will come in 2 years. Now, what really impacted their volumes this time around? It was the European region. It contributes 18 to 19% of the carbon black market, and for companies' exports itself, it's around 15 to 16%. Production challenges were seen in the European region because of higher power costs, and that is something which impacted numbers for the company this time around. Chennai Petroleum too, very weak set of numbers. We've been talking about how Singapore GRMs have fallen from the peak. Crude prices are lower as well, and that's why an inventory loss and forex loss impacted the numbers. Revenues are down 16%, EBITDA down 93%, leading to a margin decline of almost 1,300 basis points, and profits were down 99% on a quarter-on-quarter basis. Even GRMs for them came in at $4.4 per barrel versus $25 per barrel. So they have seen a massive decline in GRMs as well, and that's why the big fall in the stock price as well.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Ekta. She's here to tell us about Gland Pharma. That stock as well is getting absolutely pummeled, down more than 10%. Ekta?
Thanks. Well, yes, definitely another disappointing quarter which is coming for Gland. Revenue is down 3%. Street was anticipating a 9% decline. So that's better than expectations. But really what disappointed was the margins, which came in at 28.4%. The Street was expecting them to maintain that 30% plus run rate that they have been doing. So the Street was anticipating around 31% in terms of margins. Profit also missed expectations of around 250 odd crores. Q on Q, yes, there was a recovery, but overall, it was still a miss based on what the Street was anticipating. Core markets such as the regulated markets, which is basically the US, Australia, Canada, was up 3% this quarter. So that was a positive as compared to last quarter's performance. India continued to decline because it was impacted by factors such as a high base as well as supply disruptions. Last quarter, it was down 70% year on year. This quarter, it was down 40% on a year on year basis. What has supported Gland? Net cash is strong, 3,800 crores plus. Stock has already corrected over 50% if you count today's correction at current reckoning. From its 52-week high, it's trading at around 21 times now, 1 year forward in terms of a PE. Now, brokerages are also quite sanguine and disappointed, you'd have to say, with Gland. For example, Bernstein has an outperform rating, but they've cut their target price. Goldman Sachs has maintained buy, but they've cut their target price. InCred too has cut their target price on the stock. And Citi, which has a sell, too has cut its target price to 1,920 odd rupees. The likes of Jefferies has downgraded the stock to hold, and they've cut their target price to 2,241 as well. Overall, brokerages say that the Q-on-Q recovery has been reported, but like I mentioned, the margins disappointed, and the likes of Morgan Stanley say that they expect a resumption of growth and strong IP visibility in FY24 to help in terms of the stock going forward. A lot of the brokerages such as InCred, Goldman Sachs and Jefferies have cut their earnings as well as EPS estimates.
Take that point, Ekta. Thanks a lot for that. Meanwhile, just keep an eye out on a couple of stocks we have.